I think the first caveat to all this is I would not be investing in a stock just based upon a dividend yield. I think, Macy's is a good example of a company that's going through a difficult time. It's not a question about whether they're going to pay that dividend to me, but Macy's is a stock that you could lose that dividend yield in half a trading session, as we've seen a couple times this month. In terms of the argument in favor of looking for stocks and dividend yields is overall supporting equities, I think that's your claim. I would agree with that. If you look at the BBB credit spread minus the where we are in the 10-year, you have a level where you have an attractiveness of investing in dividend stocks as high as we've seen in 60 years. So.
So that being the case, and I see you've got a couple of options here. The first one that jumps out to me is AT&T, which to me would qualify as maybe one of those where you want to be a little careful. But talk about which ones you like here and why.
Yeah, I really like AT&T, and I think even before the news of Elliott taking more of an activist stance here, my view on AT&T is, first of all, lower rate environment. What have been some of the criticisms of this company? People have actually been concerned about the balance sheet. So as we get into lower rates, and that's arguably why we're talking about dividend yields as being attractive, you've also got a lot of relief for a balance sheet that's been able to refinance itself and bring down its cost of financing. To me, AT&T is a case where the sum of the parts clearly outweigh the whole. This might be part of the activist argument, although I don't think in the short to medium term that's really why you want to own the stock. I actually see some multiple re-rating based upon what they're doing on the media side. I do think that you're going to see an enormous follow-through from their streaming business. I do think the direct TV business is whether that's an asset that they decide to spin off or not, is not your catalyst here. Your catalyst is that I think these businesses are being run better and that their core wireless business is actually shown to be profitable. So that's the reason for AT&T. It's certainly a very attractive dividend yield, and it's been in the news over the last couple of weeks. But I think without that, it's interesting.
We also, Tim, have Invesco on your list and Pfizer, LYB as well. So there are a handful of names here. Would you restrict the list to 4, though? I mean, we mentioned there's 280 companies. Are there any kind of particular warning signs or sectors you'd have people stay away from?
Well, again, I think screening for high dividend yields is sometimes a function of finding a broken company, because relative to where it has been, you can see pretty high movements. Obviously, if a stock's beaten down, the dividend yield is moving higher. It's not a reason to buy a company. When I look at something like a Pfizer, I think this is a company that's proven to have a balance sheet and a free cash flow generation that's actually means they're paying this dividend. It's a big part of why people own it. But I actually think as we get into an environment where people have been somewhat skeptical about where growth is truly coming from, the pharma stocks outside of the political headwinds have proven to be a place that outperform in an environment like this. Again, a time when people are looking for yield, but also again when pharma stocks tend to outperform. A company like Lyondell, to me, is just really it's a company I've invested in on and off over the last 15 years as being an emerging markets guy and a resources guy at one point. This is a company where if you look at their kind of core chemicals business, this is a balance sheet that at one point I thought was a major liability. It's a company now that I think has really done a great job of actually deleveraging their core business, even though it's not a terribly sexy time to be investing in commodities and chemicals, is chugging along. It's a very well-run company. It's a company I feel very confident holding.
Well, Tim, we know how Macy's can hurt you because it's hurting you in the stock draft.
Are we doing this, Kelly?
No, we're not. We don't have time.
I brought it up, but I didn't think I was going to get put back in my face. Thank you very much.
I mean, you did bring it up. Anyway, good luck for the duration, sir.
Well, again, we're buying stocks that have a lot of room for upside, and Macy's was certainly one of them.